So welcome everyone to Getting the Most from Internal Financial Reporting. This is the second webinar in our Leadership Excellence series of webinars. So my name is Spencer Brigham. I am the Training and Events Administrator for AFOA Canada, and I'd like to start out with a land acknowledgement. So welcome everyone and thank you for being here. I would like to acknowledge that we are on the traditional territory of the First Nations. This land continues to be home to diverse Indigenous peoples, whom we recognize as contemporary stewards of the land and vital contributors of our society. We honor the traditional lands and homelands of Indigenous peoples and communities across Canada, including First Nations, Inuit, and Métis, living both on and off reserve in rural and urban communities. And just a little bit about myself. I am Ojibwe, and I'm from Walpole Island First Nation, also known as Bikajwanong unceded territory in Ontario. So, and without any further ado, I'll hand it over to Joanne.
Hi, everyone. Some of you might be new, so I'm going to introduce myself again. I've been working with First Nations for over 25 years as a CPA and a CAFM. I'm originally from North Bay, Ontario, Métis Francophone from Ontario. Currently, I am working part-time as the CFO and HR for Wata Mohawks, and I also am one of the facilitators for the AFOA. So momentarily, I will share my screen with the PowerPoints. If you're new and you weren't in the last one, we will be sending the PowerPoints to you after these sessions. So the other thing I wanted to say is if you have questions, you can put them in the chat box. I'll try to watch the chat box, and I plan on having time at the end for questions and answer period. So I'm going to share my screen. And I will begin. So this afternoon, this 1 hour, we are talking about an overview of internal reports, analyzing internal financial reports, and decision making. So we covered this in the last one, but financial governance is the process of how an organization manages decision making. Governance describes who has the power, who makes the decision, how others make their voices heard, and what goes into the reports and financial statements. So we are now going to focus on the responsibilities of counsel with finances. Their main responsibilities are on this slide is to establish plans and objectives and goals. So through community engagement, you get a community plan, a strategic plan, and these objectives are, stated annually or planned annually as well as long term. And to support that, you will need budgets to ensure that you are on track. So budgets will allow you to allocate resources to those services and programs. Council is also responsible for making sure that finance is adequately staffed and that the capacity is there as well. And if there is a need for capacity, to offer training. So there are various organizations, including the AFOA, where you can get, either courses designation or just like today, workshops, webinars to improve skills, to learn new things, to update. Also, they are responsible to demonstrate transparency to community, determine the financial reporting needs. So again, they could be reporting to the community annually or quarterly to keep them informed, review internal reports, which was we're going to spend this webinar on, is internal reports. And also to ensure there's internal controls in place, because without strong internal controls, you would lack the confidence that the information you're receiving to make those decisions are weak. So you want strong internal controls to ensure that the data you are basing your decisions on are reliable. And then also council's long-term, they need to look at the long-term financial stability of the First Nation. So let's look at the financial cycle. So we start with community priorities. You get this through engagement, various ways. Put that together in a strategic or work plan. You're looking at timelines in this. Some will be annual, some will take longer. Again, you need to put a budget to that and operational plans. So we are doing budgets where I work right now, and with the budgets that I'm presenting, I also have the plans to support the strategic plan so that we can trace activities or services to some of the objectives in the strategic plan. And then monthly or quarterly, council should be looking at least quarterly financial statements. Internally, managers need to be looking at this monthly because they need to know if they're still in budget. They need to know if they have to make any changes. And we know that that's been a big deal with the pandemic. We've had to be very flexible and constantly changing what we're doing, what we're not doing. And the other reason we're looking at financial statements on a regular basis is to identify errors. And when I say errors, or mistakes, like we all make inputting errors, or we might code something to the wrong thing. So we want to correct that now, not at the end of the year or after the audit's done. You don't want to, maybe there's mistakes in the sense of, you thought this funder was going to cover this program, and now with the pandemic, you got some funding for the pandemic. So you might be switching things around, expenses. So these things, if they're done monthly and caught immediately and dealt with, then it's less of a headache at year end, which is the next one, the year end process. So as the year end approaches, your finance staff is going to be bugging everybody for information. From, all looking for invoices that they may not have inputted, what's out there that they don't know, ensuring that everything is captured, both revenue as well as expenses, to determine if there are surpluses and deficits and what to do with those before year end. And then from there, the audit process where the auditor comes in and does the audit. So internal reporting, what is it? What does it mean? It communicates important information to inform people inside the organization. So it gives us an idea of the health, our financial health. It really helps us make decisions for the next month even. And like I mentioned earlier, with the pandemic, we've had to be very flexible and switch our plans to adapt to whatever was happening. So that's been quite the exercise to really put, to give us the opportunity, I guess, of being flexible and being creative, resourceful. So what are examples of internal reports? Well, there's the financial statements. So again, different users need different information. So for the financial statements, if your bank account is not too healthy, maybe that's one of the monthly accounts that you're verifying on to make sure that you can meet payroll and any loans or payments that you need to remit. You also are looking at your revenues and your expenses. Again, depending who you are, you're looking for different things. You're looking at variance reports. So most of the managers where I work, they get their monthly income statement, and what they're doing is looking at their current year to date and their budget, and they're looking at the variance, the difference, and they're ensuring they're not going over budget. And they are also reassessing perhaps what we're doing simply because of the pandemic. And sometimes there's a lot of, especially with the pandemic, there's been confusion. And, you know, also by looking at everything every month, there might be something that it has been forgotten. Oh, we haven't done that yet. So it's kind of a reminder. It also helps us with red flags, like, oh, we're going over on this. What can we do about it? Statistical reports. So this is very important because a lot of people don't like keeping stats, but they have such an important role. It helps to support things. So, for example, we're looking at, let's say we're looking, it's not true, I'm just making this up. We're looking at renting or leasing a car. And we've decided it's for specific employees to do certain jobs. Well, in order to not sell, but to present this to management and council, if you have your statistics, your numbers to support why you want to lease a car, you have a number, you have the number of community members and the reasons why you need to drive them around and all that, then it is easier for them to make a decision. If something comes to them incomplete, then you are causing like, well, it's a time issue, and it's also, they might just say no, and you had really good reasons. So you need statistical reports. Also, if you're in Ontario, in our health services to like for home support, we have to remit all these stats, and they figure out unit costs. So they figure out for our Meals on Wheels, this is how much the food costs, and the cost of preparing the food, and these are how many seniors and how many meals they have, and then we figure out the cost per meal. So that is a good indicator and a good thing to do internally to see if maybe you're not, your cost per meal is low compared to others, or maybe it's too high. So it helps you make decisions on where to improve services and where you need more funding. Another thing for funders, if you don't have your stats to show how many people you're going to serve, it's just harder to get the funding. Again, own source operations. If you have internal businesses or economic projects of some, you know, that generate your own source revenue, again, you need to be analyzing that all the time, because now your focus is profit as opposed to services and programs from a First Nation perspective. So again, you need to be looking at reporting constantly to make sure that you're making the most that you can, and making sure that your departments get monthly reporting as well. You may have quarterly internal reports, and examples of this would be investment reports and replacement reserve funds. So council monthly should have, you know, an idea of their regular operations status, their you know, the balance in the bank, or where they're at with budgets. But the investment report or replacement reserve funds, these are types of report you would only do quarterly, because they're not something that they need to be making decisions on, that needs to be identified. Now, some just do quarterly report with their council. So here they might be reporting variances of departments. I rather be doing that monthly, but again, it depends on the organization size. Bigger ones probably do quarterly. The smaller you are, the easier it is to do monthly. consolidated variance reports. So again, to consolidate all the departments into one report. Breakdown of accounts receivable, and then the next one is payable. Again, you might do that quarterly, especially if you are having issues there. Maybe prepaid expenses and other commitments such as leased facilities or equipment. So there are certain reports that are best done quarterly because they don't change drastically or enough to take the time to present them. Of course, if there was a red flag of some sort, you would, make the exception, but ideally these are done quarterly. So before we continue, we just want to do a little bit of terminology here. So the income statement, before we talk about accounting, let's look at what accounting is. It's the language of business activities, and it's universal. So even if you gave me the statements of, I don't know, a German company, and I looked at them, we all do like revenues less expense, and I'd see the bottom line. I would not know what any of those words mean beside it. I wouldn't even know, but I'd have a general idea of what it is. It's the numbers are all calculated the same way per se. It's the universal language, and that's how we present information in the same way so it's understandable. Now, one of the things that either council or if you have a finance or audit committee look at is also the risk of internal controls and the capacity of staff and how things are done. And one of them is that we have to follow GAAP in accounting, which is generally accepted accounting principles. And these principles drive how we record things. And one of the big law or principle that's important in whether you're a First Nation, a business, or anything is the matching principle and the revenue recognition. And because of these laws, there's two ways of recording information, the cash basis and the accrual basis. And we as First Nation and businesses across Canada, like 99% of us do accrual basis. The small percentage are exceptions because of the type of industry they're in. But we do the accrual basis. And the reason this is important, it may explain some of your questions that you have at work that you're wondering why we do what we do in finance, is we have to record revenue and expenses when they happen, whether any money has been exchanged or not. So if rent is due from my house, so let's say I have band-owned housing, those rents that are due are recorded as rent, whether they've paid me or not. It is due to me. I have to recognize that they're going to be using that house for a month. Just like expenses, we're buying fuel for public works. We're only paying it, 30 days from now, but we're recording it in this month because that is when we made it. And the reason this is very important is if we did it the other way, like the wrong way, only when we receive money would we record it, and only when we paid our bills would we record it. You'd be making the wrong decisions. So council and if you have a finance team want to make sure that there's internal controls and that there is a policy that we are following GAAP and we are capturing everything that needs to be recorded in that month, and then especially in that year, so that A, we can make the right decisions, and then B, assess if there's a deficit or a surplus, and then figure out if we can or can't defer it. So that is a really important thing. So when I present to council, I make sure every month that all the visas that were, even though we haven't paid the visa bill, that were incurred for the month are in the system. So and when you think Visa, you may be thinking small amounts, but just think, what if we purchase, because we have a pretty big limit on our Visa. So let's say we purchase something for $15,000 and I only record it next month because I'm only paying the invoice Visa bill next month. If I present, which I happen to be doing tomorrow, to my council, and they're looking at a specific department and they're almost spent, and that 15,000 is not in there because we're only going to record it when we pay it, they could be making a decision based on not knowing that information, that there's a $15,000 expense that's not recorded. So we have to make sure everything's there for them to make informed decisions. So let's look at analyzing reports. So basically, we're looking at using financial reports for a benchmark against our budget or the previous year. So it just depends what you're looking at. So sometimes most of the time we're looking at actual year to date with our budget, but sometimes I'm doing another type of analysis where I'm going to look at all the past years of and I'm going to use audited information to see what the trend line's been, what have we done in that department or that account. So it depends what you're doing for checking numbers. Now, let's go beyond numbers. We can deliver services and programs and be bang on budget, but it doesn't mean we're effective. So the big question remains, what does this information, how does that meet our objectives? Are we carrying out the duties required to meet that strategic plan? So it's just not numbers. We also have to analyze the outcomes of our programming and services. What else was I going to say about this? Yeah, so what you do with finance is you'll take the financial statement maybe for a program, nail it down to a program, and then from there, take it from there to narrow it to certain areas so that you can analyze certain things. So whenever we're working on a big project, depending what it is, so let's say, I don't know, we're redoing something to do with the water, and we may need to know in the past, how much money did we spend on filters, the water filters, the water system. So that's one kind of analysis I might do. And then I'm going to go in the past, gather all those costs so that, and let council know, this is how much we spent, this is where we want to go, you know, provide them with enough information, pro and con, so that they can make the right decisions. When you're looking at variances, again, you're looking at usually budget to current or previous years. You're looking, and a lot of people think, oh, I don't like numbers. I don't really want to do this. What am I looking for? But you know what? You scan through it, and sometimes you're just looking for those large variances and then be able to explain them. So most of the places I've worked, management is allowed to go a little over or under on line items up to a max of 10%. So the bottom one has to stay the same, like the overall budget, but that they're allowed. So an example is they might need to go over on program expenses this year, but they're short, they're not spending all their office expense, for example. So they're going to be over on one line and short on the other. And usually, depending on your policy, as long as it's below 10%, you're good to go. You don't need to do anything. If it's above, then you need to have explanations for the variance and take it further up, whatever your processes are. So some of the types of analysis we did, I mentioned this earlier, is accounts receivable. And the reason this one's important is sometimes this is an issue, and an issue, I've seen it both ways. Sometimes it's an issue with rents, that you're not getting your rents. So you need to have some sort of process in place where the minute, first of all, that you should have some sort of policy on what to do when people are behind on their payments. So, usually you give them a call after 30 days, maybe 60 days, you write a formal letter, that you have all your steps, and they need to know what that is. And many First Nation will charge interest if they're late. And I did a session a couple of weeks ago, and someone said, no way, that ain't happening where we are. So again, that is an option, and it's a normal practice to charge interest when people are late. So you also have to check the reasons. Why is this person falling behind? You also have to look at, even if you're just getting part payments, a little bit here and there is better than nothing. But rents can be a problem, so you need to be on that. And if it is, you need to have some sort of process where someone's on it monthly, and that they are getting a report and monitoring and dealing with it immediately before it gets out of hand. And again, I don't know what your First Nation would want, but at some point it may have to hit the council level, and go on their agenda, again, depending on the situation. But if the staff and management have done everything they can and can't collect, a decision needs to be made. And usually that's one type of decision they may need to make. But again, they would have to have all the information to make that. The other thing I see sometimes is governments are late at remitting funding. I worked for a First Nation that I was just hired to help out with year end. And there was a large receivable from, back then it was INAC, but it's ISC now, Indigenous Services Canada. And it went back several years. And all we did was, contact them and say, this is what, and it was in the audit too. It was accurate information. And then we brought it to their attention. And that period of time, they were like a few years behind. So anyway, we got the money back. So internal reports, this is an important one if accounts receivable is an issue in your organization. It may or may not be. Another one might be accounts payable, and that might be due to lack of funds or timing of having enough money in the bank to cover. There's different reasons why. If it's a cash balance issue, then you need a cash flow type of budget so that you can say, okay, next month I'm expecting X number of dollars. I have payroll to pay. I have this, and kind of prioritize your payments. Also, staying within budgets. Why are we not meeting? Why can't we pay our payables? You don't want that to be an issue and be at 90 days and so forth. And sometimes it's a disagreement, and someone needs to be aware and get a monthly report so that these amounts are identified early and dealt with. So perhaps it's just a simple thing of you didn't get the goods, you didn't pay it, but the communication with the vendor is not clear. So you don't want to leave that for too late, because then it's just harder. Another thing that I find in accounts payable, a possibility, is if you don't have the cash flow, but you have a large expense to pay, sometimes it might be, you have a large expense to pay, but if you pay it early, you get a discount. Sometimes that happens, especially in some industries, like when we're talking about retail and so forth, if you're buying a large quantity of inventory, if you pay early, sometimes they'll give you a discount. If you have that opportunity, sometimes it's okay to borrow from the bank to pay them, because the interest on that, couple of weeks or whatever on the loan is less than the interest you're saving. So again, that's treasury work. But something that I don't see often, but something to consider. So again, for the receivables and payables, someone needs to be looking at that too, because it could identify a red flag for capacity development, or staff not really doing their job, or not understanding the importance of being on time with payables. So that could be a red flag. And I mentioned the red flag a few times, and often when we're doing internal reports, we're looking for, like I said, errors or mistakes, because we all make them. Things change, so you might move things around. But then also it's that the consistency of perhaps these errors or mistakes become, to me, a red flag. So if I have a staff member, let's say, and they're always miscoding a particular funding, for example, the first time it's a mistake, second time, okay. But if it's consistent, then we have an issue. So sometimes there are red flags for that. For staff, it could be, like I said, just plain old errors, or not that I think this is a common thing, but potentially fraud. There might be something that just keeps getting missed and things aren't happening, and that could be a red flag to look into it. Perhaps there is fraud. So not only are you basing information with internal reporting, you are also checking for errors, checking to make sure everybody knows what they need to do and that they're doing it. And I did the accounts payable, receivable. Another one might be inventory. That's another one that's important to look at. To look at that, make sure that you have internal controls, that the inventory you may have doesn't walk off and disappear, that there's a good system to account for all of it. And also on the flip side of that, we often use ratios in the retail industries to determine if how quickly the inventory turns over. And sometimes that's a sign that it's a product that's really not selling as well. So maybe we don't need to buy as much and have so much on our shelf when it's not moving enough. So inventory is another example of internal controls that internal reporting that you might do. So decision making. So we often look at our internal statements, and the obvious one, is, are we on budget? Are there mistakes? Is this all, done correctly? And one common mistake I see happen is that, especially during the pandemic, this happened. We were doing a lot of food security. So we have one program, diabetes, that tends to buy food a lot, right? But like based on what they're doing, and they have seminars and about healthy eating and so forth. But now we were increasing the food purchase, and it can easily happen that we miscode a program's food into another department or under another funder. So those are some of the mistakes I call that we need to catch now, because let's say program A, all their food is being charged to program B, and they don't notice, they're not looking, and now it's and their year end's coming, and they're like, look how much money we have left in our budget. So they go and they buy more, and then when it's discovered that program B had all their expenses and it's moved back into program A, then they are probably sitting in a deficit. So that's another thing that you're looking for to make sure when you're making your decisions of purchasing more stuff, to make sure that all what you spent is showing in your reports. The other thing that is useful about internal reporting is monitoring management performance. And your manager is given a budget, and let's say it's public works. This is the funding you get. These are the things you have to, do, the services that you have to provide the community. And how you manage that is a way of doing appraisals, evaluations on your management as well as the staff. So if you have a strategic plan in place, you can bring that down to objectives each department has to deliver. And then you can appraise the management on that. And they, in turn, can use that as part of their evaluation of their staff at the end of the year. So in my case, my staff, our goal is not to write more checks or to, we don't have those types of services that we want to maximize, but we have certain things that we want to measure and, using our software more efficiently, cutting on time, that sort of thing. So it's not direct because of the kind of work we do, but I will still have objectives that they need to meet, so I can use that for performance. And the big thing about finance is you can deliver programs and services and be on budget, but are you being effective? And that's what the management performance is all about. Are you really, it's not just delivering the service, are you making an impact, especially in the health services or addictions and so forth. Your internal statements, again, using that to adjust your plans or your objectives when necessary. And that's been definitely a big one through the pandemic. We've had to, I presume all of you are in the same predicament that we've been. We thought, in the fall, okay, we're going to be opening everything, and then Omicron hit. So we've been, like everybody else, readjusting, but you need to have that flexibility. So a budget is never written in stone, regardless if there's a pandemic or not. You need to adapt to what's happening. So you tweak it as you go. Shift management's focus on immediate issues. So if you're not doing any kind of internal reporting and reviewing any kind of reports, you won't see the issue till it's too late. So it identifies, it gives you red flags of immediate issues. And I keep saying money, we're talking about finance, but this could be numbers too. So let's say the health department is registering seniors who wants Meals on Wheels. I mean, that increased for us big time during the pandemic. Those numbers were, like the red flag of, okay, now we got to change our Meals on Wheels. We got to increase it. We got to do this. We got to do that. So it brought immediate focus to us. Determine if cost reduction is necessary. Again, you're always looking at how to do things better. Just the other day, I was asked to sign off. I'm have signing authority on purchasing items, program costs, and somebody wanted something on Amazon that we could easily get locally. So I went to sign off on it, and I sent it to someone that does our purchasing and said, can you see if you can source this out locally? And she was able to, because now we'd be paying shipping, all these taxes. So again, are we, using our money wisely? And then determine if additional fundraising or revenue generating activities are necessary. So again, when you're looking monthly at your statements and your reports, this is, giving you the opportunity to see if you're going to need more money, what can you do? You know, sometimes we get emails sent to us that they are opening up applications and they're going to fund whatever, something cultural or whatever the subject is. And your first thing to do is to see what you have to assess, does this fall into what we're doing, and can we use that funding? But you can't wait for them to send you emails. I mean, that's another thing, is to be able to go with your numbers and your stats and say, listen, this is how much it really costs us per year, and this is how much you're giving us. Now, questions that you can ask your finance function, they're not all inclusive. So again, looking at your finance, do they have the qualification, training, and experience to perform their duties? Very important. And it's not a one-time thing. I used to teach accounting and Microsoft apps in college part-time. I haven't done that since 2016. I feel like with the latest updates in Microsoft apps, I feel like I'm falling behind big time. So it's whether it's accounting, whether it's computers, software, whatever, it's not a one-time thing. You got to keep up with what's going on. Is the sufficient staff? Do you have a sufficient staff? And again, sometimes you can kind of split these jobs with other staff members. Are reports required by funding agreements submitted on time? Very important. Because of the pandemic, everybody's been okay when you're late, but once the pandemic's over, because I know we're late on reports because they are late, but anyone working in Ontario will know that our health department in the province has totally changed and they're behind, so it makes us behind. But at some point we'll all be caught up and we will need to meet those deadlines. And do we have the policies and the controls in place? Do we have signing authorities? Are we making sure that we have, you know, these proper authorities which control purchasing? And when you control purchasing, that allows you to stay within budget. If you don't have authority, sometimes that's an issue. We use that where I work. My purpose of signing is to make sure that it's in the budget, basically, that it's something possible. If for whatever reason it's a capital asset and it was never asked in the original budget and nobody knows about it, I'm not going to sign off on it. Or if I know that they are, you know, they only have a few dollars left in their budget and they want to buy something for $5,000, I'm not going to sign on it. So you need those authority levels to have some sort of control where someone's just checking. So I'm not saying, yes, you can have something, or no, you can't have something. What I'm saying is, do we have the money and is this part of the plan? That's what I'm checking. Need to have external auditors. Of course you do. I mean, because it's public funding, you do. You have to have those, and you have to make sure that you give them everything they need. And in my experience, some people are not see the auditor as like an enemy, and I don't see it that way. I've always worked well with my auditors. I give them what they need. Sometimes I have arguments with them and I'm like, no, but then because I'm a CPA, so I don't let them take over, is what I'm saying. But I am I usually have a great relationship with them and give them what they need.
So we have a question here
Okay.
from Shirley Kelly. What degree of finance staff is required for proper span of control over the amount accountable and responsible for?
Degree of finance, like amount of staff, I'm not sure what the question means. Amount of staff, again, it depends on your the size of your organization. I mean, let's say you have 25 to 30 people in administration. You know, you probably just need 2-3 people. 4 maybe at max, not, but again, it's a money thing. I've worked for Rama First Nation for years, and they have a staff of 400 people. So let me assure you, the finance department was larger. So they would have had someone for accounts receivable, one person, another person for accounts payable, 2 for payroll, and then different positions. You know, purchasing was a job on its own. So again, it's just quantity of staff, and I think money too, because if you own businesses and there's a lot of flow, you might have staff that's just dealing with the accounting of the businesses, and that they did that at Rama as well. So whereas my other First Nations I've worked for or have, you know, done consulting for, they're smaller, they tend to be 2 or 3. So where I am now, my accounts payable is also my accounts receivable. So, you know, I don't think I'm answering your question. I think it's just do you have enough people to segregate? And again, the smaller you are, the harder that is, right? It's kind of hard to answer. You can't hire someone for accounts payable if they only, you know, have a day a week of work. So then therefore you give them accounts receivable. So you make full-time weeks, right? So that's why. And I had a person doing payables and receivable and helping me a bit, but we also needed purchasing. We needed some other work done, month ends. So we hired a second person. And then I have someone else who's not even in finance, but is the council's assistant who does part of payroll. And I'm the other part of payroll. So we kind of have it spread, but we don't have enough staff to hire one person to do just payroll. Hope that answers. Okay. I guess it means assessment is required. Exactly. And to ensure that you're getting, that everybody's covering everything, you need to make sure you have internal controls and that you have policies to cover that. And the other thing I wanted to mention is, which is really important, is the auditors will, I think we talk about audits in the next session. The auditors will assess your internal controls. That is part of the audit. And if they see weaknesses, they will identify them in a document called the management letter. So if that's not familiar to you, it's a letter to council that is called a management letter, and it says, okay, we've looked at everything and we recommend that you know, you do this, you do that to strengthen internal control. So your auditors are, you know, very helpful with that at year end, and you don't really want to wait till year end. You may want to consult them ahead of time. If you're getting a management letter right now, they're telling you what to do that would strengthen them, and you can always, you know, have a conversation with them to get more details on how to make sure that you're strengthening your internal controls. Again, protection within a technology system, that's like a big one right now. Make sure everybody has passwords, that they're changed on a regular basis, that you have, you know, good backups. Everybody's doing the cloud now, but you know that everything is there. And in my situation where I am now, we are not big enough to have one person doing IT. So we have a third party in Toronto that we hired that does our IT. So hire out, outsource that. Just like payroll, we outsource our payroll. We don't have enough people for one person to sit there and do payroll all week and benefits. So I do a bit of it. The assistant to the council does a bit of it, and we send in the hours to Ceridian and they do the payroll. So that's one thing. And what else do we have here? How do employees report inappropriate behavior in a safe and confidential manner? Some people have like the whistleblower policy. Not many people do. But you should have something. It should be clear. I feel that in my position, I tend to have people come and tell me, because I'm accounting, if they see things that they don't feel is right. But that's something that again, because of the size, we're so small, I don't see that as a problem, but that is definitely one way to deal with that, is to have a whistleblowing policy that you're protecting people, that they can provide you with the information. Oops, that was it. So do we have questions? So if you have questions, just put them up in your chat, in the chat, and I'm trying to see if I answered Shirley's question here. Yeah. Yeah, and Shirley, I think you were in the first session, and it was, what should the finance committee ask about their accounting staff? And I think it's covered in here a bit as well. Is, again, an assessment. And usually your auditor is the best person for that. And if you don't have confidence or want to deal with the auditor, there are other ways, other organizations. And the other thing too is networking. I was on a managers meeting this morning, and someone, our guys, Public Works, whatever, they're doing something with the landfill, and they did some training, and there was people from, just like here, from different First Nations, and it was a 2-day training, and what they really got out of it, well, not just what they got out of it, one of the things that they got out of it that they were kind of excited about was the fact that people were sharing, oh, this happened to us, and then they would ask, like, well, how did you deal with it? So again, through the AFOA, I've been a member for a long time, since it was incepted in year 2000, and I attend a lot of their conferences or workshops, and it's networking. So I've asked other people, this is what we're doing, how do you do it? So that's another way. Going to look at Joseph's question. The level of internal reports, I would say they need the income statement and the balance sheet on a monthly basis. I'm assuming they're meeting monthly, and anything else that might be relevant. So example, let's say you are building a few duplexes and housing at this time, then a report of where you're at, and how much is spent, and where are you compared to budget, could go to them. Let's say accounts receivable, housing rents is an issue, they could oversee that. Any other than the income statement and the balance sheet, I would say any report where it's either a one-time thing, like a project that they need to monitor to make sure it's on budget, and we know what that's all about, projects that aren't on budget, and anything else they might need, that they might see as a red flag. So I'm not sure if that's answering your question, but yeah, anything that would be relevant to them. Any other questions? And whether you're a counselor, a manager, a staff, don't be shy to ask questions when you're being presented information, because there's a big chance the person beside you doesn't know either. And I don't know why people are afraid of asking seriously. If I'm presenting something and nobody says a word and they don't know what they're looking at, and I find out, I'm going to be very disappointed, because I'm doing this presentation, not this presentation, but the financial presentation, to inform somebody, and I need feedback. I need feedback on, do you want me to do something? Do you have concern? Do you need more information? And if someone has a question and say, well, how do you calculate that, or how does that work? I'm more than happy to help to anyone and answer the question so that they have an understanding. My job is to ensure that they're making informed decision, whether it's a manager or a council. And in order for them to do informed decisions, they have to know what they're looking at. And it's my job to make sure they know. And and pictures are good. I got to start doing that more. Pictures in the sense of even myself as a CPA, if you're giving me a report and there's charts, or, I'm happy with that. Like, I don't want to go read all that too, unless I have a job to do with it, but just like looking at it, charts, pictures, stats, those help. So, yeah, if you have questions, please ask the people that are presenting to explain. Because, we're not moving forward if we don't know what we don't have, the proper information. Any other questions? We have a couple more minutes, and then a 15-minute break, and then those of you who are registered for the next one.
Yeah, so like Joanne said, there's still a few more minutes left here in the webinar. We can end early if there's no questions, but if you have any questions for the presentation, now's the time to ask. So last call for questions.
Well, thank you for joining.
Okay, so I'm not seeing anything. I guess we will end this one a couple minutes early. Someone says miigwech, Joanne, very informative. Thank you to all of you for showing up today, and thanks to you, Joanne, for facilitating this. So this concludes our second finance webinar on getting the most from internal financial reporting. Oh, we have one question here. LaRonda asks, is there such a thing as payroll advance?
Well, I've heard about it. Is there such a thing? Not advisable. If there is, need your process and documentation very well spelled out for that. So I've seen it done. It just has to be monitored. Again, this would be a perfect example if you do that in your First Nation, that you have someone keeping on track of that every month to make sure those are paid up. So I hope that was the answer you wanted. Not advisable. Board advance. That I see, yeah. So, I mean, if I'm sitting on a board and they want me to go somewhere to meet with them, remember in the old days, we used to go places, and I'm going to go to a board meeting in another town. I've seen it where they send you your money ahead of time so you get there. So they're similar to travel advances.
All right, and we will end the webinar there. So thank you, everyone, and miigwech.